All right, everybody, I'm back with another red pill for you with the commitment to trader strategy. We are finding markets that are set up for reversals. To be clear, this doesn't mean that we blindly get into these markets. What I mean here is that these markets have underlying conditions that are supportive of taking a trade in a certain direction. And today we're going to look at wheat. So wheat is set up for longs, and we're going to go through why I am looking to long this market on a confirmed trend change on the daily. So to start with, the commercials commitment to traders index, we see the commercials relative to the 26-week look back are very, very long, and they have been for quite some time. So that's bullish code number one. Secondly, we see here this is the net positioning. We see a bubble up. This bubble up phenomenon happens at market turning points. So we see this little bubble forming here between the red line as the commercial net positioning, and the blue line is the large speculator positioning. We see there's this bubble that's forming. We often see that at market turning points, but that's not the actual code. The actual code is just the overall extreme in positioning. We see that the commercials are very, very long relative to the last 3 years. The last time they got this long was back in December of 2023. So they're overall very, very long. So that is another code in our process of trying to decode this market. Now, going over here and taking a look at open interest, we see that basically what's been happening is for months we've been grinding down on the weekly time frame, seeing downward price action, and we look here, this black line is open interest. So we see open interest has been decreasing in this increasing in this whole down move. So when open interest is increasing, we need to ask the question, who's driving the open interest? And in this case, we see the net positioning of the commercials is increasing quite a bit. And so if open interest is going up while the commercials are getting very, very long, that is a bullish code. If we head over here, we're going to see that wheat is undervalued relative to the price of treasuries. So we see the brown line here, that is the price of wheat compared to treasuries, and we see we're undervalued. So that is the bullish code number 3. Now, we also see this as a supplementary indicator. The stochastic is oversold as well. Now, what about seasonals? What do seasonals say about wheat? And we're going to see here that this true seasonal, which is this blue line here, see that wheat has a true seasonal tendency to rally from now until May, with a peak at the end of February. But generally speaking, we have a seasonal tendency for wheat to rally into May. So that's another bullish code. So what else do we got going for this trade? We have some other really interesting things. We've actually had some bullish spread divergence starting to come into the market, which is telling me that the commercials are really wanting to buy this front delivery month contract, the March delivery. They really want this one more than the further ones out. And we see here the price is making lower lows. And then we see here that the spread is starting to, or the spread between the front month and the next month out is actually stronger than the price action, which implies there's some accumulation coming into the marketplace. Something else that's very interesting here is that the large speculators, they can be helpful to us in showing us when the trend is going to change. And what I mean by that is the commercials are going to tell us which direction the market's going to go. The people who are going to take us there are the large speculators. Those guys are the big banks with the big money that they're looking to make money off of the market like you and I. They are looking to speculate in this market. They're looking to buy low and sell high. They operate differently in the market than the commercials. So what we see here is this is the net positioning of the large speculators, and we see what happened in the last week is they actually started to work into the buy side of the market. They are starting to buy this market. So we're seeing an uptick in their net positioning, which could imply that I think that this move could be about to start. Very, very possible that this move is about to start for sure once they get above this 13-period moving average. But just the fact that they've ticked up at a time when we expect a major seasonal up move until basically, May overall, and this other fundamental conditions underlying the marketplace, I think these guys might be seeing the same thing that we're seeing, and they're getting on board trend change here. So that is another reason why I think this market is set up to go up. We also have some signs of accumulation coming into the marketplace. We got the Williams Pro-Go. If I go over here on the daily time frame, we do see some divergence between price and the Progo indicator here. So what this indicator is trying to do is trying to tell me, is there accumulation in the marketplace? And we see price diverging from the Progo indicator tells me that this market is being accumulated. And who is it being accumulated by? The answer is the commercials, based on what we're finding here in our analysis. We also have some other signs of accumulation here. The price, open interest, and volume. We see price making lower low while the POIV is making a higher low. So this market is being accumulated by professionals, and it's being accumulated by the super smart people who are known as the commercials. So we see here higher low on the insider accumulation distribution index. So what we see is this market is being accumulated, and that is what we like to see when we have these indexes and the commercials positioning and the large speculators and small speculators positioning, telling us that this market is set up for a bullish turn. We like to see this sign of accumulation coming into the marketplace. Now we also see the ultimate oscillator diverging. So we got ultimate oscillator divergence, and over here on the weekly, we see we're in a buy zone from the percent R perspective. So there's a lot of reasons why I think wheat is ready for a rally of some significance. How significant, I don't know. We never know exactly how far these moves are going to go. What we do know is that it is a counter trend change, counter trend trade. The trend is down, so this is a counter trend trade, but it's still a very, very valid, nice looking setup. And I'll be looking to get long on this market if we get a confirmed trend change on the daily. So if you like commitment to traders strategies, or you would like to learn more about trading commitment to traders, make sure you shoot me an email at tradiustrades@gmail.com. Like and subscribe. And I hope you really have a great week, and that this video added some good value to you and your trading. So thanks a lot, everybody, and have a great rest of your week.